Bank runs are back, Fed reserves plunge to critical levels. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Stephen Van Meter, the 5th of January 2024. The phrase, bank run, conjures up images of panicked crowds lining up outside financial institutions, desperate to withdraw their savings. While we haven't seen scenes quite like that in recent times, the underlying anxieties that fuel such events are resurfacing, fueled by a significant and concerning development. Federal Reserve Bank reserves are plummeting to what some are calling critical levels. The reserves we're talking about are the funds that commercial banks hold at the Federal Reserve. These reserves are effectively part of the bank's safety net, allowing them to meet daily obligations, clear payments, and generally operate smoothly. A healthy level of reserves is crucial for maintaining the stability and liquidity of the financial system. The recent decline in these reserves is raising red flags because it indicates a potential liquidity squeeze within the banking sector. When banks have fewer reserves, they have less cushion to absorb unexpected shocks, like sudden surges in withdrawal requests. This, in turn, can heighten the risk of a bank run, a situation where a large number of customers lose confidence in a bank's ability to fulfill its obligations and attempt to withdraw their deposits simultaneously. Several factors are contributing to this reserve drain. One major influence is the Federal Reserve's ongoing efforts to combat inflation. The Fed is actively reducing its balance sheet, primarily by letting its holdings of Treasury bonds and mortgage-backed securities mature without replacing them. This process, known as quantitative tightening, pulls liquidity out of the financial system, reducing the amount of reserves available to banks. While the situation is certainly concerning, it's important to remember that the financial system is far more complex than it was during previous banking crises. Regulators have learned from the past and implemented many safeguards. However, the rapid decline in reserves warrants close monitoring. The current situation underscores the delicate balance between fighting inflation and maintaining financial stability. The Federal Reserve and other financial regulators will be closely monitoring the situation and ready to intervene if necessary. For the average person, it's a reminder to stay informed about developments in the financial world and to consider diversifying their savings. The headlines may sound alarming, and some level of concern is certainly warranted. However, a cautious approach, guided by reliable information, is always the best approach in navigating such complex economic waters. The future will hinge on policymakers' ability to navigate this challenging landscape with precision and foresight. Watch the video below from Stephen Van Meter for further insights and information. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: dinarrecaps.com